Welcome back to U.S. Farm Report this Memorial Day weekend. All right, as we kind of kick off the summer and as we look at weather, it seems like weather is impacting the markets. Chip, we're seeing warmer, drier forecast for next week, but it seems a little bit early to be talking about that for corn prices specifically.
Yeah, it is very early. I think that's why the market's been a little bit reluctant to put a big rally in. We have covered a few shorts in the corn market. We pushed up to the 20-day moving average and couldn't do much above there. I think once we get past the Memorial Day weekend here, long weekends always tend to kind of hamper the market's ability to do much under the worry that the forecast will do a 180 over a long weekend. But if we come back in, Monday night, Tuesday morning, and we still see a forecast that takes us into mid-June that has no, measurable rain in it, I think then the market starts getting a little more worried about, this dry weather continuing into the last half of June. But right now, a little bit reluctant to put too much strength and too much fresh long positions into this forecast right now ahead of a long weekend.
Well, the other extreme of that, though, Mike, we look in North Dakota where they had a slow start to planting. Well, here we are now past this crop insurance date as farmers look at either switching crops or taking the prevent plant. As you have conversations, what are more North Dakota farmers doing this year? Because it is a different market situation than we saw a year ago.
It is. $591 spring price on crop insurance has a lot of people considering the prevent plant option because we are moving into that final plant date. And, ultimately, while there are some that are considering the route of soybeans, that still requires fields to be ready. And I think as you look at the options today with the cost of production where they're at and what the markets have recently done, that prevent plant option is becoming more attractive all the time. So as we look at the broader base of acres further north in the Corn Belt, specifically North Dakota, you might see some get lost.
Well, as we look at demand as well, there are a lot of concerns about demand. We saw some positive news on the export front this week with weekly export sales. But overall, do you think that USDA is missing the mark specifically when it comes to the new crop demand, Chip?
Well, I think that's the big question in the market's mind. And I go back a couple of weeks to the May crop report showing, 181 bushel and 181 and a half national average yield in corn, 52 on beans. And the market, due to some, pretty poor, arguably very poor export sales weeks here, is worried about demand and rightfully so. But to Mike's point earlier, you shave 1 million acres off of corn and you take 3 or 4 bushels off of the national average yield, and all of a sudden we're back under a 2 billion bushel carryout, and the market now is assuming we've got somewhere north of a 2 billion bushel carryout. My point with that is, going back, the weather definitely does matter here going into June and July, and it wouldn't take much of a threat to shave that back, even in spite of the market's assumption right now that demand is a real problem. And I'm not sure that that's warranted right now. When South America and Brazil in particular comes out of their harvest, we usually have a lull in our exports on both corn and beans anyway. So this isn't seasonally unheard of. If this comes roaring back into late summer and we put a threat on the market, then we're going to be way too low priced here.
I mean, what is the possibility that we do see that demand come roaring back, Mike?
Well, I think ultimately if weather starts to rear its ugly head, it comes back pretty quick. I mean, if you look at the setup right now, we've had a big crop in Brazil, and that's helped to offset some of the losses in Argentina. We're expecting a big crop in the United States, but a part of that discussion revolves around an El Nino pattern that ultimately is very favorable to U.S. yields typically. But in that same breath, El Nino is not so favorable to a South American crop. So as we work into the summer and start looking at projections around a Brazilian production number, we may have to temper those a little bit. And now back to Chip's point, we're starting to, shrink the global balance sheet again. And then that's where people get excited. But I think what's been a struggle for us right now is that big South American crop that did come to the ports is weighing heavily on cash prices there. And last look, we have corn prices about 70 cents lower than the U.S. and beans at about $1.70. It's very difficult for us to compete with that. And that's why you're seeing some of these cancellations on corn and why we're posting negative net sales numbers on the week. It's a tough environment right now. It's one that could change very quickly. And so, just like we say in Wisconsin with regard to weather, if you don't like it, wait 5 minutes. And that's kind of how this thing could go as we come through the summer.
Well, what is the path of least resistance when it comes to cattle prices? We need to get in dairy as well, as milk takes center stage at the Indy 500. So we'll talk markets coming up later on U.S. Farm Report.